Okay. All right. Well, we'll go with that because I can hear it coming back to me now. So that probably means it's loud enough. Right. Okay. So to catch up, biggest challenges remain the same. A lot of the people that we would deal with are not in jurisdiction. That creates all sorts of problems in terms of getting evidence together. It's very difficult to prosecute somebody. It's not impossible to prosecute somebody who is not in the jurisdiction because you can't serve and they won't be able to defend a prosecution in Hong Kong. And so therefore that sort of reduces the opportunity for the most serious things we can do to people. So those are the sort of fundamental problems, but the main one is to do with evidence. It's actually the ability to get that evidence that we need in order to be able to take action against people, and which creates a credible deterrence. I know that some of my colleagues would like to be able to fine the firms even more. Who doesn't want to do that? So they would like that, but there are various sort of statutory constraints around that. But that's probably the biggest challenge.
Okay. What about COVID and data privacy and remote working arrangements? Does that make raiding somebody harder, or has that changed anything in the past 10, 11 months or so?
Okay, there was certainly a period where we really curtailed all search activity. Now, in theory, if you get a warrant from a magistrate in order to be able to go and do a search, you can indeed go in, knock on the door and say, yes, I know you don't particularly like it, but we're still going to come in. But we had to think about our own people as well. I mean, obviously people are not going to be terribly pleased about getting that knock on the door, but we have to think about our own staff as well. So we introduced a system whereby whenever we do a search operation now, everybody is tested. They have the temperature taken. They're all wearing masks. There's lots of PPE, and we tell people that all of the people have had the temperature taken that morning, and etc. So there's a protocol that we use primarily for their protection, but effectively for the protection of the people that are there as well. That's particularly important for when you're going in and searching someone's house. I have to say, if you're going in and searching offices, it seems like there's less concern about that automatically anyway. So there was a period when we weren't doing that. We have been doing it since. Okay. But there was a period there where it kind of stopped for a bit. Okay. In terms of data, do you want to cover data protection?
Sure.
In terms of data protection, well, that hasn't really changed at all. I mean, in a sense, all it's done is made the risk of data passage in an uncontrolled way greater because of remote working. I mean, one of the things that, you see, I'm sufficiently old that I remember conference calls where the first 10 minutes was everybody saying, oh, is this on? Are we okay? And we're doing roll calls and things like that. And the last 10 minutes was a whole bunch of people dropping off the call at the end. Now you can do conferences like this and you can have 200-300 people and they're all zooming in and it all kind of works. So the remote working now is so much better than it used to be. And we went from a system where you had effectively 200-300 people who could potentially get log in at any one time. And we fairly quickly moved to a situation where working from home was regarded as tricky and not generally favorable, etc., to a situation where everybody could work from home. There would be nobody in the office. Didn't need to be anyone in the office. Now, there was always somebody there. There was always somebody physically there. But it really started to become something that everybody got used to. And it really came home to me when we had a typhoon day. It wasn't a typhoon day. It wasn't until the mid-afternoon I suddenly realized, hang on a minute, normally I wouldn't have to go to work today. And now I'll be working all day. This is terrible. That's the sort of thing you look forward to in Hong Kong. But I hadn't even thought about it. And people have been responding to emails and all that sort of thing. So, that's how used we've got to the idea of remote access. I think one of the biggest lessons we learned was that in the backup office, all of the desks are really, really close together. They're much, much closer together than this. And you really don't. So we said we had to, and we were thinking about using it, but we said, well, no, we've got to cut down the capacity down to a kind of about a third, because otherwise people are literally kind of rubbing up against each other, which is probably not ideal in these circumstances. So we've arranged it in a slightly different way.
Okay. Shall we talk a bit more about, a little bit about the strategic review that sort of changed the landscape, I would say, of SFC enforcement activities since 2016. So now the approach is a less is more approach as we see it. And is there any reason that prompted that review? Was there something happening that the SFC didn't like, which made you guys think there should be this change or review?
Well, nothing changed legislatively. Closer. Because of the filter. Okay, I was getting a lot of popping, so I was trying to avoid the popping. The technical sound term for people who weren't aware of it. There's nothing legislatively that has changed, so therefore that wasn't the thing that drove it. Every organization should sort of look at itself on a periodic basis and say, are we doing the right things in the right way? And at that particular time, we had a lot of cases on hand. And when you have a lot of cases on hand, what tends to happen is not that the highest priority cases sort of blitz through and you cover a lot of ground. What tends to happen is everything slows down. So even the most important cases started to grind slower because people are just having to do other stuff. And so therefore we went through with kind of two things really. One was, I wasn't there at the time, I should say. I'm a more recent entrant. But there were two things that were done. One was cull a load of cases. If you don't think it's going to get anywhere and you don't think it's going to get anywhere soon, then it's better to just, cut your losses and walk away from it. It doesn't mean to say that they're not guilty. It just means that you couldn't prove it quickly enough. So accept the fact that you haven't proved it quickly enough and walk away. Because what you're looking for is something that will give you a reasonable amount of regulatory product. So there was a culling of cases, and there was also a reorganization. So we decided that rather than having teams that were fully flexible that could deal with almost any case that was thrown at them, there were advantages in having some specialization. And so therefore, effectively, we broke into three areas. One was intermediaries misconduct, so that's the firms. You have corporate fraud, which is listed companies doing naughty things, and insider dealing and other market misconduct. So those sort of three areas. The fourth area was surveillance. That was within the enforcement division. And surveillance sort of sailed on serenely, totally unscathed by any of this because it doesn't actually deal with cases. It identifies things and then it refers those cases to the investigation part. Since my arrival in enforcement, we have brought the two teams together. So what was insider dealing and market manipulation investigation and surveillance are now within market misconduct team. So both of those report to me. The advantage of that is you don't have to wait for surveillance to finish before you decide, actually, this is always going to be investigated. So therefore you can refer pretty much immediately. And so therefore there's much greater coordination and synergy between the two. So that's made a big difference.
Okay. You talk about regulatory product, and we see references to great threats and seriousness of cases everywhere on the SFC's publications. Can you expand a bit more as to how, what factors would make the SFC think something is serious? Is there a financial threshold? Is it the money at stake, or, are there any sort of protocols or guidelines or checklists of some sort?
Yeah, it's one of these areas that's quite difficult to define. It's the classic sort of, it's like an elephant type thing. You know it when you see it. There's no financial threshold over which you have to bound. But that said, if the amount at risk is $1, everyone would say, well, why on earth are you pursuing that case? So clearly there is a financial aspect to it, but it's not a financial threshold. Clearly, the more money involved, the more serious it is. Public interest would be another thing. Significance would be another thing that you would take into account. So it's a whole sort of smorgasbord of different aspects that you take into account when making an assessment. Okay, is this a case we should be doing because it's the right thing to do? Or is it just not worth it? Because in terms of the output and the outcome, everyone's going to look at it and go, well, I don't really care.
Right. What about publicity? Would that be considered part of the regulatory product that you're trying to achieve?
Not really. We're not particularly interested in grabbing a headline or something like that, if you mean that sort of publicity.
What about from a deterrence perspective?
That's different. That is credible deterrence. That's part of an investigation strategy. So you're trying to give a message that certain behavior is bad and will be punished and will be pursued. So you want that sort of, but that's not what I would call publicity. In a sense, that's education for the market. We are doing, I mean, there's a whole different organization called the IFEC that does investor education, but there's an aspect of what the SFC does, which is also arguably investor education. So the example I would use, partly because we were heavily involved in it, was the WeChat posts on, the Facebook posts on WeChat ramp and dump schemes. Because essentially you're dealing with what appear to be relatively unprofessional, potentially even uneducated investors who are being taken advantage of. And then we have to pick up the pieces afterwards.
So you mentioned about specialized teams to enhance efficiency and focus in targeted investigations. Back then in 2016, there were 4 teams set up, and it was announced that there could be changes to those teams. Has there been any changes to those teams, and what are those changes?
I mean, in terms of those teams, they were really only ever a label to be put on a bunch of people. So, for example, there was a sponsor team. That's because we had a bunch of sponsor cases, and so therefore they dealt with those cases. The fact that the sponsor team has been sort of subsumed back into the intermediaries misconduct team doesn't mean to say we don't do sponsor cases anymore. It just means that it's dealt with as part of IMT. You could put a label around it if you wanted, but it doesn't really help. So you don't need, the question is, do you have that much specialization? I think when you have enough cases to make it worthwhile, then that's fine. Yes, you can do that. But it's really only putting a label around the work that you would do anyway. So there are no particular specialized teams now. There might be some in the future. You know, who knows? It's a question of whether or not we need to have that. I mean, one of the difficulties we have to deal with, we're always reactive. It's very hard to proactively enforce because you have to wait for them to actually do something first. But once you've got a case, do you give it to somebody and say, okay, we think there might be a run of these type of cases, and so therefore we're going to give it to you and you're going to be the specialized team? Well, you can't really do that because you don't know if there's going to be another one. So it's not until you've got 6 or 7 cases you suddenly realize, oh, there's a bit of a theme going here. Should we start a specialized team now? Well, that might be a bit difficult because you've allocated it to 7 different people because you didn't know they were actually going to come in. Sequentially, and they're all at different stages, and the practicalities of moving that around, and how do you deal with witness statements and things like that? There are sort of real problems there. So dividing up into, broadly speaking, 3 broad areas seems like a reasonable level of specialization without the specialization constraining the activities.
So we talk a bit more about the activity data that we see from the annual reports and everywhere. From what I can see, a trend seems to me to be that there is more civil activity compared to criminal activities. Is there any reason behind that? Is the SFC more interested in the civil remedies rather than, securing a criminal conviction, do you have, any insights on that trend?
As far as the choice, dealing with that in reverse, as far as the choice is concerned, I would rather put someone in jail than fine them.
That's scary. That's very scary.
I hope that doesn't come as a shock. Financial regulators don't get paid that well. You've got to get your funds somehow. So, if you can put someone in jail, that's deterrence, right? Taking money off a rich person so that they have to think about whether or not they go for their 4th holiday that year. That's not a deterrence. Put them in jail, that's a proper deterrent. So if the criminal route is open, we would always go that route if we possibly can. The question then is, okay, what are you putting them in jail for? What's the criminal case for? Now, previously, we probably did quite a lot of DI breach prosecutions, which, yes, technically are prosecutions, but the magistrate may well say, okay, yes, you should have notified the fact that you went over a threshold in terms of the number of shares in this listed company. And because you didn't make that disclosure, I'm going to fine you $2,000. Now, at one level, okay, that's a criminal prosecution. They'll have to talk about that if ever they're asked, have you ever been prosecuted, etc. So there is some deterrence value associated with that. But quite frankly, I've had restaurant bills more than $2,000. So who cares? So the question is that worth it? Is that worth doing? What sort of regulatory product do you get out of that? So if you're doing a lot of those type of cases, are you really generating a lot of good deterrent value kind of messaging? Or are you just putting a lot of notches on the bedpost to say, yes, look, we've got 158 prosecutions and we've collected $300,000 with those 150 prosecutions. I mean, I don't think anyone would pat us on the back and say, well done. So you have to look at what the nature of those prosecutions actually was before you decide whether or not they're worth doing or not worth doing. So that's, I think, one of the issues that you need to think about, which the sort of basic stats don't really give you. It is certainly true that there is a problem that the one I started off with, which is if the person is outside a jurisdiction, then prosecution becomes effectively impossible. The more the people that trade in Hong Kong, if I think about just my area, the more that the people that are trading in Hong Kong are not in jurisdiction, then that is going to make prosecution much more difficult going forward. But that's just a numbers game, effectively. It doesn't mean to say that's not the target. As I said, I'd much rather put someone in jail than fine them.
And I suppose, just on that, given the new less is more approach, although we see a steady drop in the number of intermediary investigations, we do see a hike in the fines, and probably we will see one of the best years for the SFC this year. So do you think it's attributable that it would seem to me that individual corporations or individuals are hit harder in terms of fines? Do you think that's attributable to some other reason? So it's just a result of the new enforcement approach?
As I said, you have to wait for somebody to do something bad before you can punish them. So it depends on what they're doing and how bad it is. That said, there is, I think, a sense of you get more regulatory product from doing more complicated cases that are harder to take action against, but you're more likely to get a significant outcome in terms of that. And if you get some headlines, that's great, because it means that people are more disincentivized, that's a proper word, to do the misconduct. That said, there is a certain amount there's a balance to be struck there, because quite frankly, we're not doing it just to get more money for the government. We don't get fines, the government gets the fines. So therefore, you don't want to sort of just get a score because it's a score. You don't want to get a big check just because it's a big check, because quite frankly, the impression I get from the global financial crisis onwards, is that regulatory fines are starting to be regarded by the biggest banks as effectively a cost of doing business. So the question is, okay, do you want to avoid that cost of doing business? Do you want to mitigate that cost? Do you want to reduce that cost or not? And there are probably some firms that go, well, as long as you make enough money, it doesn't really matter. And there are other firms who would say, well, no, actually, the reputational damage and all those other things, those things you can't quantify, are much more important. The bit I don't quite understand is why shareholders haven't been rather more vocal about this and turn around and say, well, hang on a minute, you're the guys who are running the shop and you allowed this to happen. Okay, fair enough. You might not have been actively involved. You might not have been directing it, but you allowed it to happen. And that's either something wrong with your systems and controls internally, or you just didn't care because these guys were pulling in so much money. It's fine. And okay, fair enough. We got caught this time, but we'll get away with it next time. So I would go back to, there was a case in the UK when I was there. Doesn't really matter the details, but basically a bond trading desk did a strategy which they thought was going to make them quite a lot of money. And they effectively traded multiple days worth of volume in the government debt market. Government debt values went down dramatically as a result of this, and they cashed in hugely. The governments around Europe, when they found out what they'd done, said, oh yeah, see what you did there. We think it could be market abuse, but more importantly, we are never going to use your bank ever, ever again. And then they did the maths and they worked out, okay, what fees do we get from doing all this issue for the governments, and how much money did you make? You know, let's put it this way. One of the figures was a lot higher. So as a result, they all got fired. Now that was proper enforcement. That was real action against people who do that sort of thing. So I'd much rather that the banks were looked at it from that perspective and said, okay, fair enough. You know, yeah, you're all fired. You're all gone. I don't care how much money you've made for us in the past, but you're going to give it all back to us. And you're toast as far as we're concerned. You know, that I would say is a reasonable regulatory outcome as well.
You mentioned shareholders, and I've always wondered, you know, coming from a private practice background, we're all about costs and budgeting and not exceeding budgets. You know, these investigations, it can take many years to conclude, and it takes away management time, attention, and more importantly, it incurs costs. Of course, you know, the SFC wants to protect the wider investment public by investigating problematic companies, but how do you balance the protection to be given to the investors in that particular company who may be victims of management misconduct and the wider investment public, you know, for deterrence messages and things? How do we balance that?
Let's focus on listed companies and listed company misconduct, because that's probably the most problematic. The real difficulty with listed company misconduct, in a sense, is the people who have really lost money are really the shareholders. But they always react very badly if the regulator were to come in and suspend the company. And from their perspective, they feel that they have lost the opportunity to decide to take the action that every investor should be able to do, which is basically to walk away.
Yeah.
Sell the shares and walk away. Why won't you let me sell my shares? And often the answer to that is because when we impose a suspension, if we do it, or the exchange does it, the reason for imposing a suspension on a listed company is not to protect the existing shareholders. They've already lost their money. They just didn't know it yet. The reason why it's suspended is to protect everybody else from the existing shareholders. So when people say, well, why can't you have an avenue to sell these shares? Who are you going to sell them to? And what are they worth at that point? Well, if basically, say, for example, the accounts are a complete fraud, you know, they bear no relation to reality, but we don't know how deep the black hole actually goes. How do you value that? it could be worthless. Okay, fine. Well, then just give your shares away. Or you can give them to vulture funds or something like that. But they say, no, we want to be able to sell it, well, either at prevailing price or the price we originally paid for it. That's what we want to be able to do. Well, who's going to do that? Who's going to buy your shares? It's called risk capital for a reason. So the answer is, basically you placed your bet and you lost. The regulator may possibly be able to get some money back for you, but you shouldn't be relying on that because the regulator is not there to provide a kind of investment floor. Don't worry, your shares won't go below this because the regulator will step in and get you the money. That's not how it works. So as far as listed companies are concerned, that's really difficult because everyone who's an existing shareholder feels that they've been kind of betrayed and the regulator should be doing something about it. Well, the regulator can do something about it, and that may be they ban the directors, they delist the company, etc. But that's not necessarily going to make you whole. That's not the regulator's job. The regulator's job is to try and prevent that sort of thing from happening as much as it can, and then punishing the people who were guilty of the misconduct at the end. That doesn't necessarily mean you're going to get your money back. And actually, there's a much greater sense of compensation culture in Hong Kong than in somewhere like the UK. If a company delays disclosure, it will get fined in the UK. That fine doesn't go to the shareholders. If someone is found guilty of insider dealing in the UK, they're basically put in jail. They're not told, oh, you've got to compensate the people that you bought the shares off, because they would otherwise have benefited from the later inside information. So you can have compensation. I have to say, I've always slightly struggled with this idea of compensation for insider dealing because the matching engine kind of picks an individual that you match with. So the people that you match with, you have to pay compensation to. What about everybody else? Because they were operating in the same sort of system. Why should they get compensation, but other people shouldn't? I don't quite understand that. I have to say.
How are we doing on time? We have 2 minutes.
2 minutes.
Well, we have set aside some time, haven't we, for live Q&As. Have we got any questions or have we picked any questions from the audience to ask Michael?
So any other questions from the audience? Go ahead.
I'll speak out.
Okay, go ahead.
Thanks very much for your comments. One of the biggest influences recently of the Goldman Sachs and the SFC. I was just going to talk a bit more about that, particularly with the 2 points. How the fine was calculated was, I think, the biggest fine in the SFC. And also, when I spoke to the professor, the SFC, they emphasized separate action from the US DOJ and multi-jurisdiction section. I was just wondering if you could talk about why that action was separate, what was the extent of operation of the DOJ?
Okay, as I said, not my area, because that's intermediate misconduct team. So therefore, I can only talk about the things that I know about. In terms of how the fine was calculated, that's in theory, the maximum fine that could be calculated is profit times 3. From that point on, you're basically in horse trade. What you're trying to do is to take, if that's the very worst you can do, it's a bit like how a judge sentences people for committing a crime. You know what the highest possible maximum sentence would actually be. Okay, what are the mitigating factors you would take into account? What level of cooperation was there? How serious is this as compared to other? Do we have any precedents that we can take into account when assessing this as compared to others? And through a process of general discussion, you start to coalesce around a figure. In terms of why is it a separate action? Well, it's a separate action because the breaches here relate to here, and so therefore it's separate in the sense of if you commit a breach here, then we're the people who would take action against you for that breach. So in that sense, it's separate. Now, if you have multiple jurisdictions all saying, well, we'd like a slice of that action because they also committed a breach here, then you end up having to have a sort of bit of coordination between you that doesn't stop it being a separate breach.
We'll take one more.
That's fair, because you mentioned about, banks almost doing a certain regulatory fine standpoint, say, just the cost of the. What are your thoughts on making to kind of arrest that kind of behavior of banks? Of course, you mentioned it's good to jail them, but then it's not that simple as straightforward.
Yeah, I mean, it comes from culture. And there are some CEOs who have pointed out that it doesn't matter how much money you're going to make on this deal or this particular transaction. I understand it might be a one-shot game from your perspective, but realistically, depending upon how this goes, it is likely to be much more damaging to the bank as a whole. And so therefore, we don't want you to do that. And it's the tension between the income generating parts of, quite frankly, any financial institution, banks are just an example of that, and the compliance people who are trying to protect the institution from its worst impulses, if you like. And the reality is that the compliance side is always saying no, and the business side is always saying, oh, come on, just look at the money. And you have to sort of steer a path between those two and say, okay, fair enough, but what risks are we actually running here? What does it look like? Anyone who says, well, we're not sure about this, we think it might be illegal, so let's go to a lawyer, ask them, can you confirm that this is not definitely illegal? And they get a confirmation that it's not definitely illegal. And they go, great, we can do it then. To be honest, they've already lost the argument. Why were you even asking that question of these people? Because you kind of already knew the answer. Getting that kind of, cover is not actually very helpful. So I don't think you can stop it. I think it starts with culture. I think one of the difficulties though, I think it was the FCA came up with this idea. They referred to it as the permafrost layer, which was kind of the senior management, but not the C-suite. So the C-suite got it, but the senior managers who really, really wanted to be in the C-suite, and they knew how the people in the C-suite got there, they wanted to carry on doing all of that because that's how you get to the C-suite. And everybody below them, they were all just trying to, get paid at the end of the month, and they were all trying to do a good job, and they couldn't understand why they kept getting fined because, they were just trying to do the best for everybody. And it was the middle layer that were the problem. And it's a tricky one to deal with but it does, I think, all come down to culture because, okay, we can keep on fining banks, but is it really changing hearts and minds? I'm not sure it is.